This episode is sponsored by Lupton Capital, which provides a variety of investment services to both retail and institutional investors on platforms such as Seeking Alpha, Substack, and StockTwits. For more information on these services or for links to those services, please visit luptoncapital.com. Hey, everybody. Welcome back to the Investing with Whales podcast. My name is Jonah Lupton. Super excited for our next guest. You guys all know who it is. It's Ross Gerber, co-founder of Gerber Kawasaki. Famous Tesla investor, not on the Tesla board yet, maybe someday. Ross, how are you?
I'm good. How are you, Josh?
Good. So me and you were just chit-chatting a lot. We're going to jump in and let's start with Apple's new release yesterday, Vision Pro. What does that mean for Apple? What does it mean for the rest of the industry, for AR, VR? Like, where would you start with all of that?
Yeah, I mean, before I jump into that, I'm a financial advisor. I'm a registered investment advisor. So when we talk about stocks, you shouldn't construe this as a recommendation for your situation. And many of the companies we own or talk about and trade in. So please be aware. Please feel free to look up my disclaimers on Twitter and on my website so that you understand. As an investor, I'm a long-term investor in the stocks we own, but of course we can change our opinion at any moment and make changes. And so you shouldn't construe anything that we're talking about today as your financial advice for you, but feel free to reach out and call. I also manage the GK ETF, which is a New York Stock Exchange listed ETF. And, the goal of that is diversified growth focused on technology, climate change, the consumer, and other, what I would say dynamic sectors of the economy. So with that, Apple has been the oldest investment I've had my entire life. I started investing in Apple when I was 13. So that would be like 700 years ago. And, there's very few companies that I know more about than Apple. So Apple and Tesla are core holdings in our portfolios and have been for a long, long time. And they're wonderfully complementary, where you have Tim Cook, the most mellow, reliable CEO of all time on one side of your portfolio. And then you have Elon Musk, the most unreliable, crazy CEO of all time on the right side. So they're wonderful to pair together, Apple and Tesla, as stock holdings. So Apple for the last 11 years has milked the iPhone and Steve Jobs' innovations to the nth degree. I mean, Tim Cook has done such a good job taking this legacy and bringing it as far as he could possibly bring it. They have not made a major acquisition during this 11-year period. So every time you're like, why didn't Apple buy Netflix? Why didn't Apple buy Tesla? Why didn't Apple buy Disney? They had chances to do this, and Tim passed. And those are some of, I think, the worst decisions in business history. But it was mostly his desire not to take risk and focus on the core business. And in the meantime, they tried to develop several technologies. One was a Apple car, which failed, and then an Apple TV before that, which never came out. And now we've been waiting and hearing about this headset forever. But, many of us were sort of skeptical if this was ever going to come out, because Oculus and many of the other players, the HoloLens, the Google Glass, these things had failed. So is Apple really going to take a risk to this nth degree? So yesterday was for me the most exciting day in modern Apple history.
Wow.
And I'm kind of tired because I was up last night just thinking about it. Like I was watching, for some reason I'm watching old Star Warses. Like I'm watching Phantom Menace right now because I realized I saw them so long ago, I forgot, like anything about it. And then one of the guys in my office was like watching Phantom Menace, and he's like, it sucks, but you should check it out. It's kind of funny, and it's not that bad. So I was like, I'm going to watch Phantom Menace. But I was sitting here last night thinking, as I'm watching this on my iPad before I go to sleep, that if I could watch this in VR and just put it on a headset, if it's not bothering me, if the headset doesn't bother me.
Right. Meaning it's lightweight, right?
Yeah. This experience could be like next level. So when you look at new movies like the Avatar movie that just came out, and the level of technology in the special effects and the, bird, like all the animals,
because I
jumping
went
out
to
the screen.
For Avatar, I went to the IMAX theater so I could see it 3D. But with these new glasses, you could get that experience in your living room.
And maybe even more intensely, because it's like personal versus
Right.
like you're sitting in the theater. And so it does transport your mind out of the body in the sense of like, I'm sitting in the theater and the lady next to me coughs, you're sort of like, is this virtual reality versus now you put on a headset and it's got the ear thing and that's your world. So when you start thinking about things like music, I'm in the music industry and music industry has been stalled for a long time. So streaming grew and everybody loves streaming. And now we all have access to all this music, but artists today don't survive on streaming. Like nobody does. So it's like, how do artists survive? Well, they got to sell other stuff, like other products, this or that, or touring, which is finally back again. But even that's a really unprofitable business unless you're Taylor Swift. So now all of a sudden music artists can combine visual art along with the audio and sell this through the App Store, ideally, as like musical experience. And I think the best example of that is an app called Calm. And I don't know if you've ever used Calm before, but it's a meditation app. And they've gotten all these like famous people to read stories, and it's like meditation and sounds like running water, and it's calming. It works quite well. And my kids actually really like it, like before bed, and, it's like storytelling and then like it's like Buddhist stuff. But then I was like, if I could put this thing on and it was like transporting me into a forest and like with the music. And so you have these mixed reality experiences, which are next level compared to sort of the 2D experiences we're used to with audio and video today. So if you take audio and video today and you create an environment that isn't, I would say, precluding you from enjoying it because it's like, like a headset or whatever. Now you've got a next level way for artists, creators, movie makers, visual artists, computer designers to really go next level with entertainment in particular. And that's not even talking about enterprise. Microsoft was one of the launch sort of partners with Apple. They didn't make a huge deal about it. But when you think about guys in my offices have like 3 screens, I use a gaming screen that's like big and curved, but now all of a sudden I could just like put on my headset. And then I was thinking about my Bloomberg, like in this headset, like charts, this, that, like, I don't need all these screens, I'm like, dude, this could be the most immersive stock market experience like ever, So to make a long story short, it's inning 1, it's day 1 of the new iPhone. And this is a beginning of a reality where the phone loses its primary place in our lives. And now mixed reality, other devices, headsets, and eventually just basically Oakley glasses will be a way for us to interface. Because if the glasses are just regular glasses, but then have this digital ability because chips and technology get so good over the next decade, this is the end of the phone as this dominant thing. Like I'm walking around with my phone in my face. Now I can just put on the glasses, And so this will drive innovation at Apple for the next at least 5 to 10 years and really got me excited about this next level of computing and entertainment and experience where the phone has taken away so many young people's attention to the experiences they're having as they shoot video, as they shoot selfies, as they're so self-involved, where now I could wear like glasses where, I still have access to the amount of stuff I might need, but I also am not losing out on the experiences staring at a phone.
So I don't think $3,500 is a crazy price if it allows me to increase the movie experience. If I can feel like I'm at sporting events, concerts, I think $3,500 is actually reasonable. I know some people are complaining about it. What do you think of that price tag? And do you think it'll eventually come down?
Well, I mean, you see the tech in this thing with the cameras and the LiDAR and the tech specs. I had to watch that a couple times.
It's reading your eyes, right?
It's reading it inside and outside.
Crazy.
So you got LiDAR cameras, sensors all on the front part. And then you got all these sensors in the eye that like read your face and then recreate your face and zoom. Like I was like, holy moly, you're right. $3,500. I don't think they're making a lot of money.
And then with finger movements, you're able to.
Yeah, you just use your hands, like for real, because it can see your hands through the sensors because it's kind of pointed down a little bit, like some of the sensors. So you just click like this and you scroll like this. And I'm like, dude, this is so awesome. So what I think though is I tweeted about my first experience with a plasma TV, and this was, I think, in the 90s, and I bought, like, when a plasma TV came out, I was like, this is going on my wall. I'm young, I'm single, everyone's gonna think I'm the coolest tech guy around. I had this plasma TV, and at the time it was like people did not have flat screens. It was $6,000 and it was like 500 pounds. They had like 7 guys come put this on the wall, and I remember the next year that TV selling for $3,000 and thinking how dumb I was. And then the next year it was $1,500, and then I was like, boy, this is old tech now, and I way overpaid, and I vowed I'd never be the person to do that again, but I'll probably do it again with this product. So I see the price dropping 50% each year that they come out with a new version of it, as the tech specs get more scalable, cheaper, better at manufacturing process, and it becomes more of a standardized product. So I still see the price point staying over $1,000, like $1,000, like the iPhone price,
Yeah. I mean, okay. Because what Apple does when they come out with the new phone, right? I mean, the new, I don't know, we're on the iPhone 14, 15. I can't even keep track anymore. And
it doesn't matter, does it?
$1,300, $1,400 now. And then they drop the price of the last one by a few $100s. So no, you're right. You've tried so Meta has their own AR VR headset called Quest, right?
Right. Oculus. Yeah.
Oculus. Right. How does this compare to that? I mean, is it even in the same ballpark?
When Oculus came out, I ran to get one. Like I was like, same idea with this Apple. Like, if they could do this right, this is next level gaming. This is next level, like, computer experiences. So I go out, I get this Oculus, and back then, I had to buy like a Dell computer. I had to buy an Nvidia card, which at the time I was testing Bitcoin. So I bought it with Bitcoin. Those were the only things you could buy with Bitcoin back then, was a Dell computer and Nvidia card. And at the time, Bitcoin was $500. So I bought an Nvidia chip for like a Bitcoin, and I bought like a Dell computer for a Bitcoin. Now that was a $50,000 purchase, but it worked, and I got this stuff, and I set up the VR headset, and I got all excited, and I got it working. And then I had to set up these stands so it knew where I was in the room. And I had all these cords coming off this big box on my head, and I put it on, and I'm waiting for this just incredible experience. And I got an okay one. My favorite game ended up being one where you just like do rock climbing and you kind of look around, and I'm ready to like blow up things and fly planes and all this kind of stuff. And there was a space game that was kind of cool, but its utility was like 30 minutes and I was done. But then I started realizing how bad it was for my brain, because VR alone is actually detrimental, and nobody wants to talk about it. But that's why Apple has this thing between AR and VR. And they didn't just make a VR headset, because actually you can't use VR for very long before you go crazy, because it fools your brain. It's that good. So like when you think about this product really fooling your brain, and what happens is you use VR for too long, you forget what reality really is.
Right.
So then you take the stuff off and you're like, still like think you're the starfighter, and your body's still like coming off the nerves of fighting for 14 hours with the headset on, and it does affect you. And I remember climbing, and you look down and you get the sense of like height. And I remember my brain overriding that, going, this is a game, because, heights are kind of scary for a lot of people. And then you're like looking down from some rock, and it looks like you're hanging on this rock, but then your brain is overriding that. Because if you really were on that rock, the fear and adrenaline level would be 10x, And so I realized that the Oculus had a lot of limitations. And then you'd like walk into the wall by accident if you were standing playing games. Then I didn't really want to stand and like do stuff. Like I didn't want to do that. I wanted to game and just sit and experience, and then like use a controller. And then they came out with the hand stuff, and then they made the headsets not tethered to everything. So they made it more usable, but the technology never got that much better, like not incrementally better.
And Facebook doesn't have the ecosystem that Apple has, right? With all of the apps, all of the developers. I mean, not even close.
Not even close. And then they were starting from scratch in gaming, where it's like a super entrenched industry where you're better off buying like Take-Two and then like getting a Grand Theft Auto developer to make one for your headset. Cause that's like a win, like, but you got to spend like a ton of money and buy Take-Two. And then you got to make Grand Theft Auto, which has taken years. It's supposedly coming out next year again. But I was like, dude, if they had a VR Grand Theft Auto, that could drive, it was always software that drove hardware. There's never been a great hardware product that didn't have a complementary software product.
Right.
And just like when the PC was created, that was sort of the operating system battle between Microsoft and Apple. And Apple just made a better, easier operating system for people to use. And Microsoft kind of focused on business, and so it's like, if I don't really have easy to use programs and great software and like super productivity, and that's what happened to Oculus. They just never had a killer app. They never made it productive. They never partnered with the right people. They never made the type of acquisitions necessary to drive game development or own a franchise game, like a Call of Duty or something where you could put it on VR and really drive excitement around your product. And I think it just like flailed.
But you know what they did do? They burned a lot of cash.
Yeah. And it flailed, so it's like, so my whole thing is like, because I get to work with Elon sometimes, I've been fortunate enough to really see what vision is, like Zuckerberg is not a visionary. Okay. He didn't invent Facebook. I have no doubt the Winklevosses invented Facebook and Zuckerberg stole it. He's a little bit like Bill Gates. He was like this. He was a great businessman and he took other people's creations, basically stole it and like made it into this massive thing. But now that he moved into Metaverse, which was like not his thing, like he didn't know what the hell he was doing. He had no vision for it.
Did Apple just kill the Metaverse?
Well, Apple just killed it. Yeah. It didn't kill it. It created it, really. What it was before was never going to be. So now Apple has created a Metaverse. And that's really where it gets interesting. So if I'm Roblox, where you have social gaming among young people, and I'm Apple, I want to get together right now because, boy, like I had my kids watch this. I always have my kids watch stuff like new technology to see how they react to it, because, that's ultimately who it's for, because in 10 years, when this thing is kick ass is when my kids will be like in their 20s. Right. And so they were like, wow, like we want to play games, like we want to play with this thing. When do I get it? And I was like, well, not so soon, but when you think about Roblox or Netflix, or in this case, they launched with Disney,
right?
They launched with Disney.
I mean,
it's amazing.
There's millions of people that can't afford to go to Disney every year with their kids. What if they can, download an app and get a similar experience?
Yeah.
Being into
what
Disney
happens
Park?
if we don't want to go to Disneyland? Like I
You
love
don't want to stand
Disneyland.
in line for 2 hours. You
Yeah.
just be on the ride.
Right. And I love Disneyland. I do. I'm a big investor in Disney. I love Bob Iger. I love the company. I love the products and services. And I think it's a really undervalued company right now. Bob Chapek did a horrible job there. And now they're cleaning it up and cutting costs and getting this thing profitable again. Right. But I was sitting here thinking, my kid, so it's my kid's birthday and we're taking him to Universal Studios this time instead of Disneyland or something. And I was like, I hope it's not as bad as Disneyland, because Disneyland is like almost like a episode of Survivor. It's like, can I afford it? Can I survive the day without passing out or getting killed like in a crush of people for some ride, or just puking up because I ate some weird crap that they sell, like blue drinks in the Star Wars area or whatever. Then you
get on the Tower of Terror. Yeah.
Right. So my wife hates it. My wife hates Disneyland. She's literally is like, I would rather go to hell than have to do this. And I love Disneyland, but I don't love the people.
Right.
Crowds of people have become pretty unruly in America today.
You wish you could be at Disneyland all by yourself.
Yeah, exactly.
Right.
And we had that like grad night. I was just saying, because it was my anniversary of grad night, when I graduated high school in 1989 was Tiananmen Square. It actually was Tiananmen Square. And they had this thing where you could go to Disneyland if you're a senior, and they closed the park and you could stay all night. And it was all high school seniors. Now, I don't want to tell you what we did, okay, because it was crazy. But we did that. And the whole night, like running through this park, like 10 of our friends, and we'll never forget it. And then the next morning was Tiananmen Square. And we were like, wow, we're watching history, the end of the Chinese, communists. And then, of course, that was 30 years ago or whatever. They're still here. But if I go to Disneyland and experience rides and things like that without having to go, that is worth of the price of admission, right? And it just happened to me with concerts. You know, I went to Dead and Company. I'm a big Deadhead, and I'm watching John Mayer and Bob Weir, and some guy to the right of me just like passes out, falls over the chairs. It's a whole thing. You know, they gotta like I'm trying to help this guy. People trying to help him. Then security, then he didn't want to leave. Security's like, you got to go. You know, and I'm like just trying to watch the damn show.
Right, and you go to a concert, you go to a sporting event. At least in Boston, it's 2 hours in traffic to get there.
2 hours in traffic
to get out.
Parking is $50.
Huge lines for food, bathroom. I mean,
I don't know how people afford this stuff because I make a ton of money and I'm like, this is super expensive.
Crazy. Yep.
And then I'm sitting in the stands next to regular people going, how do you afford this? Like, honestly, like I can barely afford it and I do well, you know, and it's like, and people really do dig deep in like to go to these events. And then you have one guy who pukes up or whatever, and it ruins it for people.
Yep. And
I can't tell you, the truth is I've seen this at almost every event I've gone to recently. And I took my kids to a UCLA USC football game. Boy, do I regret that.
Or families will literally spend $10,000 to take their kids to Disney World for a week.
Yeah. And my kid just thinks drunk people are stupid. Like, it's so funny because I take him to these things because I'm in the music industry and I want, you know, I want to take, he's 11, you know, it's like maybe young, but we go to stuff. I dragged him around Coachella when he was like 7. That was a mistake. Carrying a kid in the heat in Coachella, I almost died. But I thought he'd like it, and he liked it for like 10 minutes, and then it was like,
let's go.
It's
home.
Too hot, Dad. You know, and I was like, I'm not leaving. You know, like I got to carry a kid, you know, for 8 hours at Coachella, which did almost kill me. But he got to see some great artists. But when Coachella was good. So like Coachella does this live stream on YouTube, and I love it. I literally love it because I don't really want to go through the headache of Coachella anymore because most of the artists aren't my style. But there was a great show. Who was it? It was a Blink 182 did a great show at Coachella this year. Yep. Travis Barker's amazing. And I watched it on YouTube and I was so pumped. You know, I was like, but if this was in VR, I would pay, you know, like I would pay $10 or to watch that set, you know, and that's where like bands like Fish, who charge $35 for a live stream and have dedicated fans, now can do this in VR. And I heard that Fish is negotiating to maybe
probably charge more money, right?
Well, yeah, if they're doing it in VR, they're going to have more production costs, you know, but like, it would be like, if you go to a Fish show, that's kind of their thing. It's like the whole experience, you know, like they're real good at it and they have a great show to see. I've seen it more than enough, so I don't need to see it again, you know, like, you know, I'm a
big Celtics fan. And if I could pay $500 a year and be able to sit courtside, you know, with my VR glasses, watching every Celtics game, like that's a no brainer for me.
Yeah. It's so funny too, because I was looking at tickets for the Lakers, you know, a couple weeks ago in the playoffs, and it was like third row seats were like $2,500 each. And then like second row seats were like $5,000. And then like those courtside seats are like $5-10 grand a ticket, you know,
easily.
And I'm sitting here thinking most of the tickets are actually owned by like agencies or like people who've had them for like their whole family. Right. So they're paying face anyways, which is much cheaper. So you see a few online that are absurd. So like the people who, it's almost like it's hard to just get them, you know, because most of the people have them, just use them. But I was like, I don't really need to do this. I don't need to spend $20,000 to sit and watch LeBron half-ass it. You know what I mean? But I would pay for a season ticket, exactly what I'm saying, $500 to be able to watch this in VR versus just only having 2D.
Right.
And then like you have immersive experiences with statistics, multiple views, you know, you can go with sports. I mean, the thing is endless.
Agreed.
I'm a big Sunday ticket guy. So I'm a red zone guy. I can't watch a football game, like just a regular football game. Like it's brutal, you know, 3.5 hours, all the stops. Yeah, they stop. Like this change in baseball is the best thing that's ever happened to baseball.
I love it. Yep.
It's unbelievable.
2-hour games.
It's unbelievably better. Like all that time was just wasted while pitchers messed around. And I just didn't want to go to games anymore.
Like you feel to, if you're watching the game at home, you could get up, go to the bathroom, come back, and you'd only miss one pitch.
And then God forbid the 9th inning rolls around and they change the pitcher each batter, and then each one warms up. And I'm like, dude, the 9th inning, you're killing me.
Yeah, I agree.
So great change. And it's like the same thing. So like I went to the Super Bowl, and of course somebody puked up at the Super Bowl too, a few rows in front of us. And I was like, these are $10,000 tickets, and people do not want to leave. And this guy had puked. Fortunately, it was far enough away from me that I was like, I don't care, but it was disgusting. That guy had to leave. So anyways, this VR experience for sports and music and entertainment is next level, and it's going to be a huge opportunity.
What are some ancillary plays? Doesn't have to be AR, VR. I know you're a big fan of AI. I know you've been a shareholder in Nvidia for a while. It's a big position
Forever.
In your GK ETF. What other names do you like right now in AI?
Well, you're kind of shifting gears. So AI, there's actually doesn't have a ton of names. That's I would argue that some of the speculative names are really just bull crap, like C3 AI, SoundHound, these are companies that are, good luck with those, like, it's just like high risk, I guess you could say, not for me. So I went into AI, I went into ChatGPT and Bard, and I asked them to tell me what are the best plays in AI. So I built a portfolio with AI, by AI, for AI. And I added a stock to my ETF that I thought a lot of people aren't talking about that had a reasonable valuation, which is Oracle Corporation. Oracle Corporation, for example, is a database manager of huge amounts of data and actually has an AI division and is run by Larry Ellison, who's kicked butt. Okay. But Oracle is also all the servers where TikTok is hosting. Okay. And social media is going to end up being a big driver of information into AI systems about us. Okay. And so, as this data like Twitter, what Elon's doing. So Elon went to Oracle and reserved like tons of server space for his AI project. So basically there's this like massive, I would say, land grab of hardware right now because AI uses a ton of hardware. This is the whole Nvidia thing. Everybody goes, oh, the stock's crazily overvalued. And I go, not based off PE, forward earnings. I've never seen an upgrade in earnings as much as them for like just 6 months into the future, right? And so like analysts are looking at $7, $8 this year for Nvidia now from like $4 or $5. And so the change in Nvidia stock price was simply related to the change in fortunes of the company. But when you actually look at a forward PE, Tesla and Nvidia have the same forward PE, which is about 50. So these are highly valued stocks. Nvidia, is highly volatile. Last year was down like Tesla, 60, 75%. Kicked my butt last year. It's so funny how in 22, I'm an idiot because I own Nvidia and Tesla, in 23. Oh, you're so smart. You own Nvidia. I wasn't so smart last year when they were down 75%. My fund got hammered. I was down 40% last year because I had these things as major holdings. And now they come back and, we're up 14.5% year to date. And we're a diversified fund. We're not a NASDAQ fund. Like the tech funds are all up 25%.
Right.
But we own John Deere. We own Vici Properties in Las Vegas Sands. We're a diversified fund. So an investor can buy our fund and know that it's growth oriented, but diversified.
Right. Not just mega cap tech.
Yeah. Because you just buy the NASDAQ 100 like that. Like that's not a bad strategy. Like you buy the GK and you buy the SPY and you buy the Qs, like that's a great equity strategy. You have a concentrated portfolio actively managed by me that's really targeted. And then you sort of the S&P broader index. And then you got that tech focused NASDAQ 100 and you got a great little growth portfolio.
Didn't Jensen Huang, the CEO of Nvidia, didn't he say something along the lines of these data centers will have to spend around $1 trillion over the next decade upgrading their hardware?
Yes. This is what I'm talking about. Like one of the really interesting things about Apple yesterday, which like nobody really talked about, was they said we have this new chip called the R1 chip that's going in. The R1 chip is a GPU. It's taking the visual data and processing it, and it's next to the M2 chip, which is their new CPU. Okay. So Apple's now developed their own GPU, just like Tesla.
Huh.
Okay. And nobody's really talking about this because you can develop the technology around a chip and then just have Taiwan Semiconductor make it. That's what like Nvidia does. So all of a sudden, Apple's a GPU maker. You know, so we added a little bit to Apple's a top holding, but we added a little bit to it yesterday as well in my actively managed ETF, which is publicly available information.
Do you think Apple will develop these chips just for themselves, keep it proprietary?
Yeah, because they'll use them all.
Okay.
You know, and then if they're doing an AI project, then they can use those chips instead of paying huge amounts for Nvidia. See, what most people don't get about Nvidia, as you know, I trimmed some of my Nvidia because I had to. You know, when we make lots of money, I got to take a little bit of profit, but it doesn't change my opinion of the company. You know, so it's a 6% allocation for us. And so that's pretty high. And so when you look at Nvidia, they're really in like four main businesses, and everybody's talking about AI, which is kind of their growing business right now. But actually, Nvidia is the leader in autonomous driving chips. So before Tesla, they used Nvidia. So Tesla invented their own chips after they used Nvidia chips, but Nvidia chips is used by everybody else. So if you're into autonomous driving, well, Nvidia is the leader in GPU chips for cars. Okay. And then we've got cryptocurrencies. Well, not real good time for cryptocurrencies, that's for sure. But if I'm a crypto miner, Nvidia chips, right? And then it's gaming. That was their core business.
Yeah.
When I bought Nvidia years ago, it was because I was at E3 and they had a booth. This was like 20 years ago. And they're like, we're the best gaming graphics chip there was. And everybody bought these GeForce chips for their PC gaming. And that was like their best business.
I mean, I have 6 monitors and they're all gaming monitors with Nvidia chips in them.
Yeah. Well, they just drive your core graphics processing on a level like nobody else, right? So if you're a gamer like I am, you do care about this quality of your screen and the graphics.
Oh, sure.
Yeah,
refresh rates, all that stuff.
Yeah, totally. And so they're constantly pushing the envelope on like what's possible. And so they dominate gaming, and gaming's in a down cycle now because everybody over gamed for a few years during COVID. I was just talking about it with my Call of Duty friends, how much we used to play. And now it's like, we all have to schedule like when we're going to play because we have real lives again.
Real jobs.
But we used to play 2 hours a day because it was like every night, like
nothing else to do.
Yeah. You know, it's like, what am I going to do? It's COVID. So, so when you start thinking about Nvidia in the 3 businesses that they're already in that are growth businesses, like autonomy is growing for them at over 100%, but it's just a lot smaller than gaming. It's about 10% of the gaming business. And now you got AI chips. So right as they're like scaling their AI business, scaling their chips, release all these new advanced chips, it was like boom, ChatGPT had, and they were just like at the right place at the right time with the right product scaling. And so so what they did that I think most people really wanted to buy the stock was because they were already scaling. And so instead of like huge demand for chips, we don't have the ability to scale, and now we're going to spend a lot of money to scale quickly, but our margins would be like impacted. They were already scaling. And so they're like, oh, our margin is going to be 70%. Well, you're like, oh, we're going to do 11 billion in sales at a 70% margin for a quarter.
Wow.
And you're like, wow, this is a whole nother game. Everybody goes, oh, well, price to sales, 30 times price to sales. I go, you can't look at price to sales. The only thing that matters is price to earnings.
Right.
Because when you got 70% margins, nobody cares what sales is.
That's what Kathy did. Kathy Wood was, talking about price to sales, which is irrelevant when a company has 50% profit margins.
Well, and she sold the stock. So, she missed out on 200. I think she lost like 200 million that she would have made. And so like, we got to come up with some reason. Now, once again, fundamentally, she's not wrong. NVIDIA is a highly valued stock, but this is the same person who owns DocuSign, the same person who owns Teladoc. Every one of her portfolio holdings doesn't make money, and all of a sudden Nvidia is overpriced.
Agreed.
So that's the part about her money management. When I started my fund, my goal was to beat her, actually, because ARK and I were Tesla investors, and I didn't have a public vehicle. I managed money for individuals. So we made tons of money for our clients during the Tesla rise. Okay. But her company grew real fast because it was like, oh my God, I could just like buy an ETF, we have to like open up your account and transfer your portfolio and financial plan. It takes time. So she grew real fast, got real popular. And I was kind of like, not jealous because I got more media than her and everybody sort of recognized that I was sort of involved, and she didn't do as much media, though she did some, but she made a lot of money. And I did too, but
I think they got up to about 65 billion in AUM at the top.
Some crazy number.
Yeah. And I think
like here I am at 2.5 billion or whatever going, I suck, and she's got like 30 billion. Now I think they got like less than 10.
Yeah,
and
they're low double digits from what I hear.
But also like their 5-year performance is just horrible. Like horrible.
I think it might be negative.
It is.
Yeah, is it? Wow.
And like if you run a 5-year S&P or Qs, like, that's not negative. You know what I mean?
No,
it's been a tough 5 years, but
80%, 80, 90%, I would think for the Qs.
Yeah, a little less. I think I was just looking at some stat. I think the S&P is literally exactly on its long-term historical average of like 10 to 12% returns for like the 5-year, the 3-year, and the 10-year. Like it's like the S&P is supposed to do about 10% a year, like plus dividends forever. It's like that's the S&P. And so like it's kind of interesting because now we're exactly on that trend line. So markets are like correctly valued, not undervalued, not overvalued, based off the long-term trend of the S&P, right? So like you can earn 10% if you just buy the S&P over the long term, granted there's risk and you have to hold it. So, when you look at an active manager like myself, if all I do is try to get alpha and I'm compared to the S&P like her, like she's done a horrible job. But when you're a financial planner like me, it's a lot different because we're not in the pure alpha business. Like clients don't come to me and say, make me the most amount of money possible. That's not what they say. Actually, what they say is the opposite. Don't lose my money.
Right. Protect it. Yep.
Yeah. Right. The only people who are aggressive are like young people who don't have a lot of money who are like, I want to be aggressive because I'm like 25, 30. I'm saving $1,000 a month. Let's buy Apple, Tesla, Nvidia. Fine. Okay. But most people with money, they're my age, they're 50. They got some money. They come to me. They're not like, put it all in Cathie Wood's funds because I want to double my money in 3 years. No, they say, this is all I got. Don't lose it. So we're fundamentally a conservative firm. And so our ETF just represents part of our portfolio, what we call the alpha of the portfolio, the growth part. And we layer that over the S&P, as I just mentioned. And then we layer that over a bunch of bonds, depending on your risk level. So when you look at a traditional portfolio for us, it's much more conservative than if you just bought a bunch of growth ETFs and hope to make money, And so that's the big difference between me and Cathie. So I was like, I'm glad I'm a financial advisor because we actually like work with people, help people. And I like working with people where as an ETF provider, you don't even know who your clients are. It's like,
do you think about whether or not we're going to have a recession? And if you do think about it, does it impact your investing style at all?
Yeah. Well, I think it impacts our clients. We have thousands of clients at GK. And so when there's a recession, it's hard for people and we represent the public. And so it's hard for our clients and it sucks for everybody. So we're real in touch with what's happening in the economy, unlike a lot of firms that only work with rich people, because we work with a lot of regular people and small businesses and such. We're really in touch with the economy here in California, but also nationally because we have clients all over the country. But we're heavily focused on the West Coast. So when you're an investor, the only thing that matters is earnings. Okay. So I was trying to tell this to some Tesla people who were like, oh, what's Tesla's price target? And I said, well, you can just pretend it's XYZ stock and it's trading at what multiple and what's its earnings growth. And we call that the PEG ratio, PE to earnings growth. And that's one of the most important things I look at, which is how fast is my company growing and what premium am I paying for this growth? Because a lot of people are like, oh, it's growing so fast. But if you pay this massive premium, then it's already priced in. So what most people don't like or want to accept is that stock prices are mostly efficient in that most stocks, most days are priced correctly. Okay. Most stocks, most days. Okay. Some days you get these really volatile days over macro events where all stocks go down and you have an opportunity to buy the apples, right? But that's not.
They're priced based on expected fundamentals.
Yeah. And there's so many people who trade Apple, like so many analysts, Warren Buffett. So Apple's trading for what it's worth, whether you maybe like this or not. That's what it is, but markets aren't efficient in my mind. So there's always opportunities. You got to find the inefficiencies in the stock market. Like where are there prices that are off? Things are way too cheap or way too expensive. Now I tend to try to find cheaper stocks. I'm not a short seller. So, I'm trying to find like, where are stocks too cheap? Like, for example, I just took a pretty big position in Cinemark Theaters. everybody talks about AMC, but it's a piece of crap. I own some AMC debt, but the guy who runs AMC is, not my kind of guy. And the company is just heavily indebted, and they owe me a lot of money, and they're paying a very high interest. And so I don't want to be an equity holder of AMC. I'll be happy if I can get my money out of the debt, because it'll be a huge return if I make it out of the debt, because I bought it at 50 cents on the dollar, get a 14% yield. I'll double my money if they pay this thing off in like a year.
What is AMC debt trading at right now on the dollar?
Same 50 cents on the dollar.
Oh, okay.
Yeah. Because, he's been trying to be able to dilute. He needs to dilute equity, and the equity holders keep voting him down, and
is he trying to raise cash through stock?
Yeah, he's got to
pay off the debt.
Yeah. But like, the equity guys want the stock to go up, but they don't understand that the company has to pay off its debt. And the only way for them to do that
to zero.
Yeah. And then your stock goes to zero versus going down 50% just because you're diluting,
right.
But the stock needs to get diluted. I do finance. I'm just telling you what, these AMC people want to argue with me. And I'm like, dude, it's a theater. I've been doing this my whole life. Theaters are one of the simplest businesses in the world to run. It's a room where people watch shows and you serve them expensive food. It's really simple. Anybody can run a theater, So they've added a lot of technology to make the buying and process better. But in general, theaters make or break based off the movies, Yep. But the cool thing is, if I make a movie, I take a huge amount of risk, let's say 50 to 100 million, but the theaters take none of that risk. But if the movie's a hit, the theater gets 40% of the revenue. So I know for a fact that basically every weekend over the next 6 months, great movies are coming out. I think we got Transformers this weekend. We had a bunch. There are so many good movies out right now, just in the theaters.
Usually summertime's usually a pretty good time for movies, right?
It's the time.
Yeah.
So Cinemark is one of the best run theater chains, at least indebted. And the valuation in my mind was based off the paradigm that the theater business is still dying. Okay. But what I see is that if I'm Netflix, Disney, everybody else, and now HBO and everybody is putting everything back in the theaters because they want to make this revenue. They realized how dumb it was to make a great movie. Air being the movie that really convinced people, because Air was going to go to Amazon Prime direct. And it was a great movie. And Ben Affleck and Matt Damon can bring people into theaters. So Amazon decided, what, let's put it in the theater, and they put it in the theater and it did 100 million. So they take in 50 million that they wouldn't have taken, pays the whole budget, whatever. And I think Damon and Affleck were getting back in. They didn't take anything up front. And so they're like, we want to be in the theater, because we'll make more money. It'll be more profitable. So sure enough, that works. Then they drop it on Amazon Prime and everybody wants to watch it now because it did well in the theaters. And the buzz of Ben and Matt, oh, this is great. And so now Amazon Prime is like more valuable to people because a good movie was on it. You see? So they finally figured out this whole idea of like spending $100 million on a movie for a streamer was stupid. Like Netflix already was big enough that they just say, we're going to spend this much on movies, and good or bad, that's how much we're spending, But all the growing companies were just like losing money trying to make expensive content like Lord of the Rings or something, So now they put this in the theater, and who benefits? Well, how many theater companies are there? There's not many.
Yeah.
They're all dead.
Does Mark Cuban own one still?
Yeah. Oh no, Landmark. I think that's dead.
That's dead.
Yeah. So there's basically, I think, like 3 theater companies, and IMAX is kind of a hybrid theater company. It's a technology that works with AMC and other theater companies, but they also get a cut of revenue. But I'm not a huge fan of IMAX. We invested in it once many years ago. And just, they just can't seem to make money. So Cinemark sitting there opening their theaters. They got, several thousand screens, hundreds of locations throughout South America and the United States, based out of Texas, and they're going to rake it in. So
I'll play devil's advocate. If the Vision Pro is a big success, you think that'll be bad for the movie chains long term? Will people just stay at home with their Vision Pro glasses?
No. So here's the way I look at the world today, because we've never had so many great things we can do at home. Actually, we own home builder like Lennar, because my whole theory is like owning a home has never been, like, if you look at office buildings, right, they're worthless. and home values continue to grow because you're working from home. I can work from home. And all of a sudden we need a little more space. All of a sudden this efficiency is great for businesses because we don't have to pay rent, and it was like win-win-win for everybody. We got a better lifestyle because of technology. I'm just as productive on Zoom or whatever. And it was like win-win-win. But the problem is you go crazy. So offsetting that is travel, which people are doing in mass. So people want to have real experiences now and go out. So we're seeing record attendance at concerts, record attendance at live events, record attendance at sports events, record travel, record numbers in Vegas. And now the Chinese are free. So they're starting to travel and they've been locked up like horribly for a year.
And they love Vegas.
Oh yeah. That's MGM. That's one of my top holdings. Love MGM, love the casino business, been in it my whole life. And Vegas is just killing it right now.
But they also have Macau too. Chinese
Macau, and now that's open. And we just took a big position in Las Vegas Sands because they own the Singapore hotel, the Marina Bay, and they own the hotels in Macau, which are now all open and all full. And they just opened a brand new hotel. Most people in America just are so clueless to what happens in China every day. It's like we sort of just think China's the bad guy, and whatever I read on like Yahoo News on a headline is really China, and it's not. China is a very complex and deep country with lots of different people and opinions. But most Chinese people are kind of just like Americans. They want to do the same things we want to do, travel, whatever. It's really the government of China.
I was just going to say, I think most people, they thought about it, they don't dislike the Chinese, they dislike the CCP.
Yeah, and communism. And just the whole concept of not having freedom and democracy is un-American, right? And so like in China, I think, we're going to see a massive resurgence in travel, same things that Americans are doing, going to the theaters. And we're seeing that now in Macau. The numbers are just growing like crazy. So what I think is that if you stay home too long and you use VR and you use Zoom and you're working from home, and next thing you know, you're drinking all day and you blow your head out. It's just like, it's not good for you. Humans are social creatures and want to experience things around other people. It just is. Like music, being a musician, I can tell you that's what makes concerts special.
Oh yeah.
It isn't the music. It's that a great artist creates a tribal connection between all the people there and each other and the band. And the Dead was probably one of the best at doing this. Fish does it great. Great bands do this. If you go see, like Chili Peppers are going on tour this summer, you got to see this tour. They're so good. And if you go to a Chili Peppers show, everybody around you is having a great time. You're with them. You're having a great time. And the band's having a great time. And the vibe is just off the charts cool if you get the right band on the right night. And you just can't, and you'll remember it your whole life. I remember shows my whole life that I went and saw that were incredible.
That's why I think the AR VR for concerts and sports will only work if you're kind of looking around and you can see other people around you. Mm-hmm. So you feel like you're there. You feel the energy of the crowd around you.
I think that's where the limitation is. I think you're right 100%, but like, it's still not real. Right. So it's like, it will never replace being courtside at a Laker game. And then Jack Nicholson's next to you,
high-fiving your buddy.
Yeah, and he's like puking up because he's so old or whatever. I don't know. It's like when you go to a Laker game, it's an experience. It is. So I don't think it replaces that. What it is that there's a lot of nights I want to have that experience, but I'm not going to go through the hassle.
Right.
It's a lesser version of it.
Right.
Just like we noticed. Like we just had a big event for my company the other day in person, and clients came out, and a lot of these people we've only met on Zoom. And we started doing these events and we realized how valuable we are because Zoom gives us about 80%, maybe 85% of the traditional relationship we have with people. It's great and it's super efficient, but it's not the full relationship of when you actually used to see clients in person. So we've made adjustments. We have these events, all the clients come out and everybody just bonds because it's like, oh, we finally saw you, shook your hand, looked you in the real eyes. And like, it builds a connection that you can't build on Zoom, And I think that's where I have no fear that real life will still be very attractive to people.
What do you guys do at GK? Do people come in the office every day or is it on and off?
Are you talking about clients or employees?
Employees.
Well, we're an investment firm, so certain employees have to come in because we have to be open. It's like you don't like, so we have a team of people we kind of consider super special because they've made the commitments, come in every day.
Like operations, for instance.
Yeah. I mean, it's not a choice. I manage billions of dollars. If I'm out and somebody with, people withdraw money and people deposit money all day, every day. So it's like, people have to do this and process this. And we do let some of those workers work remotely a couple of days a week, but certain team members are here every day. Now they have some flexibility, it's not like, but financial advisors at the company have a lot more flexibility because the way our work always was flexible, because we would go see clients oftentimes at their offices or travel or, so we would see
lunch. Yeah.
Yeah. So it's going out to lunch, schmoozing, meeting a bunch of accountants for dinner or drinks. Part of our job was always like that. That was always attractive to me, actually, when I was a kid. So for the advisors, it's not a huge change, but we have this efficiency increase because of Zoom. So we're able to see twice as many clients as we were seeing before the pandemic. And that's been hugely beneficial to us as a company and to our advisors. So we have the most productive advisors in the industry. Our average amount of clients per advisor, and with the highest level of quality, nobody comes close to us.
What's another stock outside of Oracle? And I won't be respectful of your time. I know it's almost 2:00. Outside of Oracle, another company that you're kind of bullish on right now that no one's talking about?
Well, we've like recently added a couple new companies. One I added, which I think is reasonably priced and pulled back a little bit, is Louis Vuitton, LVMH.
Is that another China play?
It's not just a China play. It's Europe's coming back too, and the rich get richer play. So it gives you access to two businesses I really like that actually serve more the mass affluent, which is Sephora, which is in the beauty industry, and Tiffany's, which really they both serve the mass affluent, and they've done a wonderful job. And it's 75 of the top brands in alcohol and fashion. It's really a wonderfully run company. Bernard Arnault is just hugely successful. It's a family-run business. They got Pharrell as like the chief, guy at Louis Vuitton style. It's just a really well-run, great business. And I really just think, unfortunately, I think the rich will get richer. And as the economy turns across the globe, the Chinese consumers will be back and forth. The European consumers will be back and forth. And of course, the Americans as well. So I think it's very, very beneficial for a company like Louis Vuitton.
Was Tiffany's their last acquisition?
Yeah.
Okay.
That was the one they bought right before the pandemic, and then was like, oh, we don't want it.
Right. Try to get out of it.
And then they got a lower price. And then it was like, what a disaster. And then they turned it around. Now Tiffany's business has doubled.
Wow.
Yeah. That's Bernard Arnault. The guy's amazing.
Who do you think they buy next? You get to guess on their next
Louis Vuitton?
Yeah.
Well, it's interesting because they have this relationship with Hermes. And Hermes is also similar type of business that's really good. And Louis Vuitton owns part of Hermes, and it's a big bite, but boy, that's a great brand. So I think, continuing to just focus on fashion, luxury, alcohol is hit and miss. They do a lot of wine, but they also own alcohol brands. So I don't know if that's where I want them to go. Fashion is super hard. I love the beauty industry. So
yeah, because the M and the H is Moet and Hennessy, right?
Yeah. They got a lot of alcohol. So that's doing well because the restaurants are back, the bars are back. So they serve, those markets well.
Are they in the hospitality industry at all? I mean, do they own any restaurants or hotels?
I think they have small investment in hotels. They don't own restaurants. But they really are functioned around their brands. It's really a brand. So it's 75 separate, they call houses, and each brand has its own leadership, and they're just a really, really well organized and really well run business. I mean, when I started doing research into it, I was like, holy crap, they own everything. Yeah. And I was like, if I want exposure to all these great high-end brands as the economy recovers, this is the perfect play. Not to mention,
there's a Sephora next to my building, and that place is always packed.
It's a good business. I mean, it's really good business. Beauty's a good business. I know it well. My wife's in the beauty industry, so I have great insights into the industry. Ulta Salons just got cheap. It's a retailer. They got beat up. This is also a very good beauty company we're looking at. We haven't added yet. As far as in AI, I think one of the undervalued plays that people, when you look at Microsoft and Apple valuation, and you look at Nvidia's valuation, and Tesla's valuation, then you look at Google's, it seems a little off because Google's trading more like 25, 27 times earnings and everybody else is over 30. And I think there's this perception that it will hurt their search business, which is true. But I also think it will enhance their search business because I don't think I'm going to start using Bing. I just don't think I'm going to start, So having Bard become a real product and all the information that Google really has about the internet, us, our businesses, they have the opportunity to have real-time AI in a way that no other company can.
Not to mention Gmail and all the other productivity apps they have. Yep.
It's just, they have so much good information over a long period of time and really Google was just lazy. Everybody there was, rich and comfortable,
fat and happy.
You go into the office, they had beer on tap and a surfboard, and it was absurd. Ironically, Google literally made the worst real estate investment of all time. They bought a mall to convert into an office building in West LA, which is now completed with nobody in it. And I was like, boy, who's ever in charge of real estate at Google's super dumb.
Jesus. Or are they trying to lease it out now?
I guess. I mean, everybody's trying to lease out in LA. My God, we're going to expand actually, probably next year, our office footprint. And I've never seen so many people look like wolves with the spit coming out of their mouths. Like, oh my God, somebody's going to expand, that's how bad it is in commercial real estate.
I mean, San Francisco is just as bad right now, right?
It's worse. It's like downtown LA. The downtowns are getting destroyed because they've allowed homelessness and crime to go crazy in the downtowns. Then it's like massive office buildings, tons of traffic, which is one reason why people want to work from home. They don't want to sit in traffic and go into you go to a parking lot in a downtown building and it could take 30 minutes just to get to your office because it's like this cavern that you go down, and it's like a whole thing, and then security. And then it's like super expensive. You go to lunch, all the restaurants are expensive. And so people are just not doing that anymore. My office was always in the suburb of Santa Monica here, and it's a low rise and it's super easy access and parking. And that was always our strategy. So clients would want to come here. You know what I mean? So for us, we have great space, but it's empty. We're the only people who work in our building basically. And it's not a huge building, but it's kind of lonely.
What happens to all the tall skyscraper buildings in LA and San Francisco? I mean,
that's a good question.
Who's going to own them?
And New York, I would add New York to that list.
New York. Are the banks going to end up owning all of these buildings?
Banks do.
I know. I mean, whoever has the debt on them.
Yeah, the bank.
I mean, someone bought those buildings years ago and used a shitload of debt to do it. And
I think Business Week just did a whole article on downtown LA and all the different properties and how distressed they are and how much debt. So what the equity owners are doing is they're turning over the loans to the banks because there's no equity and
just walking away.
Yeah, they're called non-recourse loans, so they can't go after other assets. So it's like when you buy a $500 million building, you sign an agreement with the bank that says if things go bad, you can only take this building. You can't.
And all you're doing is just losing whatever equity you had in that building, right?
Yeah. So you put in, let's say, 30% down on a building. Let's say it's a $300 million building. So you put 100 million in, you borrow 200 million, and your expected cap rate at that time was 3 to 4%, And so, all of a sudden you can get 5% guaranteed. And, I literally said to somebody the other day, they were trying to sell a commercial building. And I said, I'll give you a 6-7 cap, and in this case, it was like a $50 million thing. It's actually a great building in New York. And the guy says, oh no, we want a 4 or 5 cap. And I go, what are you on high?
Why would you do that?
Why would I buy a building in New York at a 4 and 5 cap? It's stupid. And so it's like landlords are in just huge levels of denial right now. And so the banks are now taking these things. And now let's say I got a $200 million loan on a building that's probably worth 80 million, right?
Jeez. Right.
So let's say it's down 75%, right?
That's crazy.
Because it's easy to figure out the value because you just say, what's my cash flow today? Because to just expect these buildings are going to like fill up is stupid. So you can just revalue these things based off the current cash flow, and you'll be happy to keep all the tenants you have because people are still paying on leases with nobody in it because they don't want to default on the lease, but every lease that ends, you're just losing it. And all this debt's going to come due. And I was thinking about looking at some of these regional banks to buy, and I just said, no way.
That's why, yeah, they all
that and capital requirements are going to soar from the Fed, and I don't want to be a bank at all.
I own 0 banks. I mean, there's some fintech stocks I'd rather own instead of the banks.
Yeah, I own LPL.
Yep, I'd rather own like a Schwab or a Goldman. I'd own those before I'd own.
Goldman sucks, but like Schwab,
yeah.
Yeah, we own LPL, which is like Schwab's competitor. We use both at my firm, Schwab and LPL, as custodians, and they're both great companies. LPL, I think, is way better managed. Do you
guys use LPL? Because I know you're.
Yeah, full disclosure, I use LPL. Okay. I know Dan Arnold well, the CEO. They've been huge supporters of our firm, and I know Schwab well. I've been using it since I was a kid, and we also have assets at Schwab. But I can tell you that LPL is like way better than Schwab, and Schwab is integrating TD right now. And TD was actually a better platform than Schwab, and so it's a really weird.
I heard people complaining about that.
Yeah, it's a weird situation because we actually really like TD, and I do the TD show all the time, TD Ameritrade show, and they were a great business. And when Robinhood went 0 commission, Schwab says, "Oh, we'll do 0 commission," and it kind of screwed TD, and the stock got hammered, and Schwab just picked them up. It was like theft,
So what are they doing? Are they sunsetting all of the TD technology, like getting rid of?
I don't know.
Forcing people to migrate over to Schwab. Yeah,
that's what happens. Because you can't just merge technologies,
Right. And they don't want to have to manage 2 different platforms, probably. Right?
No. I mean, there's a big problem with all the legacy companies, whether it be tech or finance, where it's like, how many platforms do you use? It's like at LPL, they switched from their platform to the new platform. And when we started LPL, I think it was like 11 years ago, they were like, oh, it'll be like in a year. And it took like 6 years. And now we're all on, it's been several years. And then there was like several years of just like issues, and now it works pretty good, but like you can expect a 5 to 10 year transition on upgrading your technology from legacy companies.
I know I think we're out of time here. Anything we forgot to talk about? Anything you want to say? What's the website for Gerber Kawasaki?
Yeah, gerberkawasaki.com, and you can follow me at Gerber Kawasaki on Twitter, or on our YouTube page. We do a lot of stuff on YouTube and in the media, so you can certainly know what we're thinking. If you're looking for financial advice and build a financial plan, we do that, and we work with people all over the world. Reach out to us at gerberkawasaki.com. You can buy the ETF if you manage your own money and you want to get a little of our picks and what we're really doing here. You can just buy our ETF GK. So that's another way to be involved with us. But feel free to reach out.
Last question. Are you excited that Elon finally brought in a full-time CEO for Twitter?
Well, that was actually what I was working on for the last 6 months. So when I was offered the opportunity to invest in Twitter in October, I think it was, one of my first questions was like, who's going to be CEO? Hopefully it's not Elon, was what I said. And they said, no, it's going to be Elon, but it'll only be short, quick. And I was like, thank you, because I don't think this is a good job for him. In January, he's like, well, I'm going to be here for a long time. And I was like, oh my God, this is going to destroy Tesla. It's going to destroy him. This is not good at all. And he is not good at running Twitter. And it turns out he isn't good at running Twitter. So Linda Yaccarino is a really seasoned executive, really top person at NBC and an ad person. And now she's bringing over NBC execs. And she started on Monday. And I couldn't be more excited, because we've seen Elon in China last week working the Tesla job. He's working the Tesla job again, and that's what Tesla needs. So I'm a Tesla shareholder first and foremost. I have a small investment in Twitter, but I'm a Tesla shareholder. I have, I think about $75-80 million in Tesla for clients. And so it's like, it's crucially important that Elon's focused on this company, not only for climate and for technology development, but for the financial success of lots of people. Now, lots of individual investors. Tesla probably has one of the largest individual investor bases in the world. So I'm really happy that Elon's refocused, because I don't think he fully understands how many people rely on him for their retirements and their futures, and screwing around at Twitter talking about what it is to be a woman is like a huge waste of time, you know?
Have you ordered your Cybertruck yet?
Yeah. And I'm waiting for it. I'm giving up my Plaid for a Cybertruck as soon as I can get it.
You're going to drive it to work every day?
Yeah. Oh, yeah. Oh, yeah. I mean, when I get this Cybertruck, I guarantee you that everywhere I go, people will stop and
for sure.
like go like
take pictures.
Yeah. Cause when I see it, when I go to the factory and stuff, I'm like, wow, you know, like, you know, it's next level. No, you know, I don't think they've let anybody drive it yet. They've taken some people in rides in it, and they had one 2 months ago when I was there, and I was like trying to force myself. They took like 5 people one at a time, and I was like trying to force myself into there, and I couldn't get in this line.
There's gonna be so much buzz. It is gonna be the single best marketing launch of all time if done right. One of them.
I mean, I think it's already. I think once people see them on the roads and they're like the Rivian's beautiful. Like you see Rivians all over LA now, and they're beautiful trucks. They're beautiful trucks. They did a great job, but they're not like badass.
They don't stand out. Yeah. They don't stand out.
Yeah. Like my wife wants one, you know, like the Cybertruck is like a Schwarzenegger vehicle. You know, it's like the Hummer when it came out, where everybody's like, that's a Hummer.
Yeah. People's heads are going to snap around when they see
and like, if you're cool, you're going to get a Cybertruck, you know, like the rappers, the entertainment people, they're going to get Cybertrucks.
They're going to get them all pimped out too, probably.
I mean, it's going to be endless, endless customization of this thing.
Ross, thank you so much, man.
Thanks for having me
to do this. And I look forward to talking to you again. See you on Twitter.
Yeah. Thanks.
Bye.